In the US, the troubled First Republic Bank is being acquired by JPMorgan Chase. Regulators had taken control of the bank, the third major institution in the US to fail in 2 months. First Republic shares fell last week after it revealed customers had withdrawn $100 billion in deposits in March. That was the month Silicon Valley Bank and Signature Bank collapsed, causing fears of a wider market fallout. Let's join Kristen Saloomey live for us now in New York. And Kristen, tell us a bit more about what led to this takeover.
Well, U.S. regulators stepped in the early morning hours and seized First Republic Bank and then turned around and immediately sold it to JPMorgan Chase. I'm standing outside of the headquarters here in Manhattan, New York. This was after a weekend of intensive negotiations to try to prevent another bank failure that would cause panic in the markets and distrust among investors. The government stepped in, did these negotiations, and Chase came to the rescue. First Republic, of course, had been teetering on the brinks of collapse ever since those other two banks collapsed in March. The issues for all three of the banks were similar. They relied on wealthy deposits and wealthy depositors who were not protected by federal insurance if a bank were to collapse. The issue for them is rising interest rates. They had these loans and investments that lost billions of dollars as a result of rising interest rates, and they just could not keep up. So again, this quick action on the part of Chase Bank, which they're hoping will prevent other banks from going down the same road. $30 billion had been invested in First Republic, but that was not enough to save it. So the good news today is that people who have money in First Republic Bank will be able to go to those branches and access their money. Those banks are now branches of Chase Bank.
So that bank's been saved, Kristen, but of course the big question is whether more banks are at risk and what it means for the broader economy.
Right, absolutely. And Jamie Dimon, the CEO of Chase, took to Twitter today saying that this puts the worst of this crisis behind us, basically that this aspect of the banking crisis is largely over. And the markets do seem to be taking it all in stride. They're overall trading slightly higher than they were last week, mostly in the green. Some banking stocks are trading lower, but nothing drastic, not the drastic pull out of the banking sector that some had feared might happen. Bigger question is what this means for the economy going forward, because rising interest rates have forced many banks to pull back on loaning to businesses and to individuals, and so that could have a chilling effect on the economy overall. But for now, it seems that crisis has been averted.
OK. Kristen Saloomey in New York, thank you.